Welcome to the Explainer. Okay, today we are diving into a total mystery in the private markets. We're tearing down Parag Parikh Unlisted shares. This is a company generating some truly massive numbers completely away from the public eye. We're going to dive straight into the raw financial data provided by ARM Securities to see exactly what is going on beneath the surface and honestly figure out what is driving so much crazy investor interest.
So we're kicking things off with a massive question today. What exactly pushes pre-IPO valuations right into the stratosphere? How does a private company, one that operates totally under the radar, away from the daily scrutiny of the public stock market, justify these incredible price tags? Well, we have to look strictly at the fundamentals and the raw data to find out.
The very first thing that literally jumps off the page is this absolutely staggering number, a 13,814 crore market capitalization. That immediately sets the stakes for our teardown today. That is an enormous valuation for an enterprise that isn't even publicly traded on the open exchanges yet. It begs the immediate question, what kind of financial engine is actually supporting that kind of weight?
To make sense of that giant number, here's our roadmap. We're going to hit the unlisted share opportunity, check out the company and leadership profile, dive into their explosive revenue and profit, look at assets, equity, and reserves, and finally, wrap it up with market value and pricing.
All right, let's jump right into Section 1, the unlisted share opportunity.
So the crucial point we need to talk about here is the prominent spread between the buy and sell prices. According to the data, if you want to buy these shares, you are looking at 16,000 rupees. But the sell price? That's listed at 18,000 rupees. That sizable gap tells us right away that this isn't like trading a highly liquid stock on a major exchange where spreads are literally pennies. Buying in the unquoted market is honestly a bit like buying a rare collectible. You need high conviction because finding a buyer later takes time and liquidity is just much tighter.
Now, as impartial analysts of this source material, we have to point out something actually pretty funny here. The broker literally left the company's core focus as a blank template. It literally says, specializing in industry or sector, please specify for tailored content. So, you know what? Without some polished marketing brochure or qualitative narratives to rely on, we actually have an advantage. We're just going to let the pure, unvarnished financial metrics tell the true story of this enterprise.
Moving right along to Section 2, Company and Leadership Profile. Let's see who's running the show.
The source data outlines a pretty straightforward board structure, led by founder and chairman Parag Parikh and CEO Anjali Verma. They established the key leadership since the company's incorporation. And what is really notable here is the timeline. Incorporated in March 2020, we are looking at a very young, incredibly dynamic entity that has scaled super fast in just a few short years. It's honestly pretty rare to see this kind of trajectory happen so quickly.
And when we check out the ownership breakdown, control is heavily concentrated. Promoters are holding a rock-solid 60% majority, while institutional investors have scooped up a notable 25% stake. The remaining 15% is with public and other investors. Why does this breakdown actually matter to you? Well, a 60% promoter holding shows the founders still have massive skin in the game. Plus, having that 25% institutional backing adds a serious layer of professional financial validation to the company's prospects.
All right, Section 3, Explosive Revenue and Profit. This is the engine of the whole operation.
The broker sheet gives us this dense wall of numbers detailing 6 years of raw financial history, everything from net revenue to operating expenses, EBITDA, and profit after tax, charting a course from fiscal year 2020 all the way to fiscal year 2025. Honestly, reading every single cell would put us all to sleep, so let's just pull out the absolute most vital trends to really understand this growth story.
When we track the big milestones from that data, the delta is just phenomenal. Net revenue explodes from just under 19 crore in FY20 to nearly 145 crore in FY23, and then absolutely rockets to nearly 429 crore in FY25. That is staggering top-line growth. They aren't just increasing their sales a little bit, they are practically multiplying them year over year. I mean, in FY24 alone, they saw nearly 98% revenue growth.
And the profit after tax? Same exact story. It is on a highly aggressive growth trajectory, hitting an incredible 246.60 crore by FY25. It is wild to think they started at a very modest 3.69 crore back in FY20. Scaling up profit this rapidly, while simultaneously expanding revenue at breakneck speeds, shows incredibly strong operating leverage. Their profit after tax margin actually expanded to over 57% by FY25. That is exactly the kind of efficiency investors are hunting for in a high valuation company.
Next up, Section 4, Assets, Equity, and Reserves.
Let's check out their balance sheet health.
A quick glance at the balance sheet numbers reveals total assets ballooning from roughly 72 crore in FY20 to over 702 crore in FY25. But here is the absolute most crucial part of this data. Listen to this. Look at the liabilities. Long-term borrowings, zero. Short-term borrowings, zero. This massive, nearly tenfold asset growth is happening completely debt-free. They are funding their explosive expansion entirely through their own operations.
The big takeaway here is how intensely they are building up a war chest, accumulating over 641 crore in reserves and surplus by FY25. Keep in mind, they started with about 63 crore in FY20. This indicates extreme financial health. A company with this much cash and reserves and absolutely zero debt has incredible flexibility to weather economic storms, invest in new innovations, or just continue to scale without ever having to rely on outside lenders.
Finally, Section 5, Market Value and Pricing. Let's bring this all back to the valuation.
So, here's your quick investor pitch deck summary based on the source data. We have a debt-free company with a massive earnings per share of $284.30, trading at a price-to-book ratio of nearly 21. Now, a PB ratio of almost 21 is undeniably a premium valuation. The market is clearly paying a high multiple here. But when you pair that premium with an EPS of over $284 and absolutely zero debt risk, you can instantly see the logic. Investors are willing to pay up because they are buying into a fast-growing, highly efficient profit machine.
The source notes there are precisely 7,695,874 shares in existence, which, when multiplied by market prices, creates that massive overall valuation. With a relatively small number of outstanding shares, just under 7.7 million, the per-share value naturally gets pushed much higher. That is exactly why we're seeing those five-figure rupee prices per individual unlisted share. Supply is just incredibly tight compared to the earnings it generates.
And the unlisted market has seen some aggressive momentum for these shares, literally more than doubling from their 52-week low of 8,200 to the current peak of 18,000 rupees. That kind of rapid upward price action over just a single year highlights exactly how much demand is chasing this specific equity in the unquoted space. Clearly, word of those flawless financial results we just analyzed has gotten around to private, institutional, and high-net-worth investors.
Ultimately, after unpacking this whole crazy growth story, you really have to ask yourself, are these premium pre-IPO valuations the ground floor of a new giant or the ceiling of a fully priced asset? I mean, the numbers, from the explosive revenue scaling to the expanding profit margins, all the way down to the completely debt-free balance sheet, are undoubtedly fundamentally strong. But with a price-to-book ratio near 21, the market expects absolute perfection moving forward. So, is it worth the premium? That is the fascinating puzzle of the unquoted market. Thanks for joining me on this explainer, and remember, always keep questioning the numbers.